Hey guys, welcome back. Today I'm back with a very interesting video about ATR trading strategy, and I'm going to explain how the ATR indicator works, how you can use it in order to take profitable trades, and I'm also going to share with you our risk management strategy that you can use in order to avoid false breakouts and take high risk to our ratio trades. So without any further ado, let's get started. But before we get started, please make sure to subscribe to our channel so that you can be updated about our latest content. So first of all, let's talk about what ATR is. ATR, or average true range, is basically the measure of volatility in the market, and the ATR value indicates the number of pips movement in the certain period, or by default that period is 14. So for example, if I measure from here to the last 14 candles, so till here, the ATR here would measure that how many pips the market moved from here to here in these 14 candles. So if I apply the ATR indicator, I can go towards the indicator tab and here search for ATR, or average true range. So right now, as you can see, the market moved from here to here, and the ATR value changed from 78 pips to almost 96 pips or 94 pips. So that's how much the market moved, and that is how much the volatility is in the market. So by default, we don't want to be taking trades when the market is ranging, because there are some strategies that allow us to be profitable even when the markets are ranging like this, or this. But normally we want to avoid these ranging markets. We only want to take trades whenever there is a lot of volatility in the market, and we can be pretty sure that our orders are gonna get executed and we're gonna get the best prices available. So that can only be done in trending markets, and the trending markets allow us to take higher risk to our ratio trades. But how do we decide, or how do we know that the market is going to move impulsively in the bullish or bearish direction? And that's where the ATR indicator comes in. So we can use the ATR indicator to predict if there is going to be a impulsive move in the market. And one thing that you need to pay close attention to is that when the ATR value moves from this low to this high, it does not mean that the market will also move from certain low to certain high, because ATR is the measure of the volatility. So when the price or the ATR value changes from here to here, it would mean that the market is going to get volatile and there is going to be an impulsive move. It could be either in the bullish or bearish direction. So this is what we need to find out, and this is what we need to decide using the ATR value. And necessarily the movement of ATR from this higher value to this lower does not mean that the market will also move lower in the and in the bearish direction, because now what this actually means, the movement of ATR from this higher value to lower value, means that the volatility is decreasing and market is entering this ranging market structure. As you can see here, when the ATR value changed from this to this, the market was in ranging market structure, and whenever there was the movement of increase in ATR value from here to here, the market gave us this impulsive move. And we want to capture these moves because we want to be in the trending, we want to take trades during the trending markets. So now let's talk about how you can use the ATR in your trading strategy. As I said, that we want to capture the moves whenever the market is about to give an impulsive move in either bullish or bearish direction. And to decide that, we need to zoom out a little bit and find a certain level around which the ATR value normally reacts, or the market normally reacts around that ATR value. So for example, if we go here, we can see that around 0.46, because this is the lowest value that is available when I zoomed out. So around 0.46, market is near this value, it is reacting. The market is giving these impulsive moves, as you can see here. And let me just show you. So at this here, you can see that there is this impulsive move, and at this value here, you can again see that there is this impulsive move, and at this ATR value, there is this impulsive move. So whenever the ATR reaches this 0.46, the market reacts. And in this case here, You can see that here the market gave this bearish impulsive move, and in this case here again the market is giving us this bearish impulsive move. So when the market reaches the 0.46 level, the market reacts, and we want to capture those moves. So for example, if we take a look here, we can see that the ATR value is reaching this 0.64 or 53. So again, as we already know that whenever the market reaches the 0.46 level, the price reacts. So here the ATR value is changing from this low to high. So it's making this low. And as the market or the ATR value changes, we want to capture that move. So for example, here is the formation of an inside bar and the breakout of this inside bar is in the bearish direction. So we can take a short position at this breakout candle, and we can put our stop loss above this breakout candle. So if we go here and take a short position at the close of this candle, and we can put our stop loss here. And if you have a higher risk tolerance, you can also put your stop loss here above this inside bar candle. So now we know that from the change of this ATR value, the market is going to an impulsive move, and that impulsive move with this breakout candle, we're able to capture that impulsive move, and we can take profit at 2 restore ratio, so which would be a good trade. As you can see here, our 2 restore ratio is met. So this is how you can use the ATR value to take a short position. And similar is the case with taking long positions using the ATR value. For example, here you can see that there is this change in ATR from this value 0.57. So if we zoom out, when the market reaches this 50 value or 47 or 50, the price reacts. So again, the ATR value is making this low, and here the ATR value is reaching this low again. So now the market is getting ready to react. So on the very next candle, as you can see here, on the very next candle, the market gave this impulsive move. So we can open a position at the close of this candle here, and then we can wait for the market to hit our take profit level. So this is how you can take the ATR value and ATR trading strategy in your trading, and this is how you can use it to predict which way the market is going to go. Is it going to go in the bullish direction, or is it going to go in the bearish direction? I hope you like this video. If you have any questions, please comment down below. I would love to answer them. Also, don't